Accounting analytics for WinBooks is a joint development between Agilos and LogiDashboard. Agilos is specialized in development of solutions for decision support. LogiDashboard is one of the key resellers of WinBooks in Belgium. I want to briefly show you the solution and how it can help you getting better insight into the financial situation of your company. It's basically a mixture of dashboards, reports, but more importantly, it helps you analyze your financials in a very dynamic and interactive way. The user interface is very intuitive, which makes the solution very easy to use for business users without any training. We've developed this solution, which works on top of your WinBooks accounting environment, using ClickView, a business intelligence solution of the newest generation. I'm going to show you two things. First, I'm going to assume I'm the financial controller and want to analyze how our company is doing at this point in time compared to a year ago. In a second example, I'm the person in charge of accounts payable and receivable, and I want to see whether we got better in collecting cash from our customers and paying our suppliers. So let's assume for now I'm the financial controller and I want to get a high-level view on our financials. We just closed our first financial quarter of 2013. By the way, for this demo I'm using a French version of the solution, but the end user can select another language such as Dutch or English. So I choose Overview, which is basically the screen with key performance indicators. So here you see a number of key performance indicators that give me information about the status of our working capital and give me insight in monthly and year-to-date cash positions. So I'm choosing 2013, March, to analyze our first quarter in 2013 and compare that to a year ago. To the right, you see a chart visualizing how our net income changed from last year. This bar shows the delta in revenue compared to last year. It is green because it has a positive effect on our net result. However, these bars show that on the cost side we had a considerable increase as well. It is red, meaning that it has a negative effect on our net result. That's also the case for instance, other costs, resulting in a negative income at the end of Q1 2013. This is worrying, so I want to have a closer look at this. So I want to have a look now at our P&L for the first quarter in 2013 and see how that compares to the end of Q1 2012. So I'm going to our P&L. You see that what I selected in this case, 2013 and March, is highlighted in green. And that is the case for the rest of the analysis I'm doing in this solution, until of course I deselect any of those if I want to have a look at data in another year or in another month. The P&L shows a better gross margin, so it increased from 847,000 at the end of Q1 2012 to 917,000 at the end of Q1 2013, thanks to more revenue with it. But it also shows a dramatic increase in operating expense, as you can see on this line, which increased from 7,000 to 43,000. So I want to explore this a bit further, and by clicking on this line, I get more detail about it. What this information tells me is that the cost increase is mainly because of this line, because an increase in cost, and this is basically social security. So I'm going to have a discussion with our HR director to see where this increase in social security cost comes from. The technology that is used to develop this solution also provides features for collaboration. As an example, I could add a note here questioning where the increase in social security cost comes from and send a link to my HR director. This would enable him to see exactly the same screen in his browser with the selections I made, so we can have a collaborative discussion over the phone, both looking at exactly the same numbers. This is a very innovative feature that is given by the ClickView software that we can benefit from in this solution. As a second example, I want to analyze how our days sales outstanding and days payables outstanding changed compared to a year ago, since that of course impacts our working capital needs. I'll first have a look at 2012, and I can see that on average our customers pay us after about 50 days, which isn't bad at all, and that we pay our suppliers with about the same delay. To the right, you can see that as a result, the difference between the working capital this generates and the need for capital is positive. So we have a healthy cash situation in 2012. Let's have a look now at 2013. And as you can see, here the story is different. The blue line, which indicates the average time it takes to get money from our customers, increased to a number close to 70, while we pay our suppliers in less than 50 days. This working, by the way, I can change the type of chart with a simple click or even look at the actual numbers. So we need to do something here. I would like to have a look at the top 10 customers that pay late. So I go to the Open Invoices tab, and I'll only select those invoices that are more than 30 days late. I can see that the total cash to be collected from customers is 357,000. More than one third, 135,000, comes from one particular customer. And here are the open invoices. So I think I know what to do next. To wrap up, I just showed you a very small part of the type of analysis that can be done with the solution. It is complementary to WinBooks accounting and gives you full reporting, dashboarding and analysis capabilities in a very flexible, intuitive and easy to use way. For a more comprehensive demo or information about the solution, please contact LogiDrive or Agilos. Have a nice day.